Good morning, ladies and gentlemen, and welcome to the CT Private Equity Trust PLC Annual General Meeting. Throughout today's recorded meeting, attendees online will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. The company will review all questions submitted today and will publish responses post today's Annual General Meeting. The Annual General Meeting will commence momentarily. Thank you.
It is now 1 o'clock and time to commence the 26th Annual General Meeting of the company. The Company Secretary has advised that a quorum of members is present. Accordingly, I declare the meeting open. Firstly, I thank you for attending this meeting today, both in person and remotely by the Investor Meet Company platform. I'm joined today by my fellow directors, Craig Armour, Swansea Conrad, Tom Burnett, and Audrey Baxter. We will start with the formal business of the AGM, and then Hamish Mayer, our company's investment manager, will provide a presentation. I would request that any investment-related questions be saved until after the presentation. The notice calling the meeting is set out in pages 72 to 76 of the annual report and has been in shareholders' hands for the statutory period. May I take this notice as read? Thank you. I would like to note to the meeting today that I have identified a typographical error in resolutions 12 to 14, which is included in the notice of the meeting, and would propose a minor correction. Resolutions 12 to 14 relate to the company's annual renewal of authorities to allot, issue, and make market purchases of ordinary shares in the capital of the company. The error occurs where the expiry date of the authorities conferred by such resolutions to be proposed today is stated to expire at the conclusion of the annual general meeting of the company in 2025. This should instead reflect, as is standard for such annual renewals, at the conclusion of the annual general meeting of the company in 2026. I therefore propose a motion that these errors be corrected. I note that under the terms of Article 65 of the company's Articles of Association, I can consider amendments to correct patent errors in resolutions proposed in the notice convening the meeting. Are there any objections regarding this proposed correction? Thank you. I will now put the proposed correction to a vote. Those in favour of approving the correction as I have read, please raise your hand. Thank you. Those against the correction, please raise your hand. Are there any abstentions? Thank you. I declare the motion to amend resolutions 12 to 14 carried. The correction will be incorporated, and the minutes of this meeting shall show that resolutions 12 to 14 are proposed as amended with the agreement of those present. We will now continue with the next item of business. The report of the auditor, which was unqualified, is set out on pages 48 to 54 of the annual report. May I take this report as read? Thank you. The annual report, including my statement to shareholders, has been in your hands for the statutory period. Before proposing this year's resolutions, I would be happy to take any questions from shareholders regarding this document, including in relation to the resolutions being proposed today. I would ask that before asking a question, you give your name, and if you're a proxy or corporate shareholder, the name of the shareholder you are representing. Sir.
Phil Clark, a long-term shareholder. The net assets of the company are bumping along just above 500 million. Although I'm strongly in favour of share buybacks because of the opportunity given to you by the market, it'd be an awful pity if the net assets were to fall below 500 million. So I wonder if you keep an eye on that when you're making your decisions as to buy shares back.
Yes, just to remind you in terms of the overall capital allocation policy of the company, clearly the emphasis is very much on the dividend payments to shareholders. And we do on occasion use the opportunity to make a tactical buyback if it's deemed to be appropriate and consistent with stable market in the shares. If there are no further questions, I will continue with the formal business of the meeting. We will now proceed to vote on the resolutions. In accordance with the company's articles, I hereby declare that voting will take place today by way of a poll. This will ensure that the votes of all shareholders are counted, including the majority of our shareholders who cannot attend the meeting but who submitted a proxy form. I'm appointing MUFG Corporate Markets, the company's registrar, to act as scrutineer. If you have already voted by sending in a pre-printed form or proxy or direction indicating how you wish your votes to be cast, then unless you wish to change your vote, you need not vote again in the poll, as your existing vote will be counted. If you have not voted and you wish to, please complete the poll card that was given to you when you arrived and tick the appropriate box next to each resolution. Depending on how you wish to cast your vote, signing the poll card where indicated. If you did not receive a poll card and would like to receive one now, please raise your hand and we will deliver one to you. Please indicate the way in which you wish to cast your vote in respect of each resolution by putting a cross in one of the boxes, for, against, or withheld. Please note that a vote withheld is not a vote in law and will not be counted. Once you have voted on the resolutions, then please sign the poll card and return to the representative from MUFG Corporate Markets, who is situated at the back of the room. I now propose formally that each of the resolutions set out in the notice of annual general meeting are put to the meeting. Resolutions 1 to 12 are ordinary resolutions requiring a simple majority of the votes cast to be passed. And resolutions 13 to 14 are special resolutions which require 75% of the votes cast to be passed. As I've previously noted, resolutions 12 to 14 shall be put to the meeting in amended form as approved by the meeting today. I now declare the poll formally open. The poll will close 10 minutes after the end of the meeting. If you have any questions about filling in the poll card, or if you require any assistance, please speak to the registrar's representative. I have a copy of the proxy votes which were submitted prior to the meeting, and they are available for review at the end of the meeting. The scrutineer will recalculate the results at the close of the poll, and the final results will be announced to the stock exchange as soon as practicable and published on the company's website. That concludes the formal business of this meeting, and I will now pass to Hamish for his presentation.
Well, good afternoon, ladies and gentlemen. Thank you, Richard, for chairing that. It's not as much fun doing it that way. I think raising hands is more participative, but this has become the convention. Thank you all for coming today, and also all of you who are joining online through Investor Meet Company. That actually brings the number of participants up into the hundreds. I'm going to make a presentation now which will run through the highlights of last year, 2024, and also give you an update on the state of the company now and some comments about the outlook. I'll go through this reasonably swiftly, and if you could just wait till after the presentation before asking questions, that would be great. So first of all, indulge myself for a moment by blowing our own trumpet a little bit. In the 26 years since the company was established, we have gathered a few accolades, and we've just put them on this slide. The recent ones include that we are one of the 20 best performing investment trusts over 10 years, according to the Association of Investment Companies. In fact, we're the 9th best, so top 10 position there. And we're also one of their next generation dividend heroes. So this means that we've actually grown the dividend every year for 10 years. To become an actual dividend hero, we have to do it for 20 years, so a few more years to go. And last year, as I think you probably remember, we celebrated 25 years with a sort of party organised at the London Stock Exchange. And we got a nice piece of glass for that as well. So anyway, we've had a few highlights. Just looking back on last year, we made further progress in the NAV. NAV total return was up 4.6%. Markets were pretty challenging, but we still made some progress. Dividends, 28.04 pence. And that gives a yield on the share price of about 5.7%. And we obviously continue with this well-diversified and resilient portfolio, which has continued to grow. Some statistics on the co-investment portfolio, which is over 40% by value. These are companies that we hold directly. And during 2024, we saw good revenue growth, 20% revenue growth, 24% EBITDA growth. That's earnings before interest, tax, depreciation and amortization, or in old money, cash flow. And you can also see the average size of companies that we are investing in, with revenue of about 67 million, EBITDA of 12.4 million. So these are what we would describe as lower mid-market companies. So these are, small companies in the great scheme of things, but they are, this isn't the corner shop. I mean, these are substantial businesses that are carefully selected for investment. And we expect them all to grow well. Looking at some more detail in the portfolio, how it changed over the year, we have actually nearly 600 underlying companies. And that number increased slightly over the year. There was about 48 that were exited, 75 added. We had 9% of the companies by number sold during 2024. That was 48 exits, and they were sold with an average uplift over the preceding valuation of 23%, and a weighted average was 27%. These numbers are slightly down on the year before in terms of premium, but not much. And we would expect that exits would be at a healthy premium. You're going from an unlisted, illiquid holding to some form of, liquid cash or shares. And so you would expect a decent uplift. In terms of the type of exits, they're roughly evenly split between selling to other private equity funds and being sold to trade, so that's to another company in the same sector. None of our exits were by IPO. That is normally quite a small proportion, but it hasn't really featured for the last couple of years because it's been difficult to IPO companies. And if you look at the exits by geography, the UK has contributed a lot, 68%, which is more than its proportion in the portfolio, but all the other countries have also chipped in a little as well. We've had a couple of significant exits during 2024. Jolly's, the pet shop chain, was sold. Coretrax, the oil well plug and abandonment business, was also sold. So there's plenty of activity. So turning now to the first quarter of 2025. So if we have had quite a quiet start to the year, NAV total return slightly negative by 0.8%. This isn't unusual at this stage. We have a limited amount of new information going into the valuations since we produced the full year numbers at the end of March. And the dividend's been maintained at 7.01 pence. We've had realizations and new investments, or slightly more new investments than realizations. And the realizations have slowed down a bit compared to the final quarter of last year. And that's a trend that we see across the market. We made a new investment in a company called Friendly, and I'll talk about that more in just a few minutes. This is an exit we made last year. We got the money in September. This is ATEC. So this is an insurance company. It's a broker and managing general agent that specializes in insurance for, amongst other things, beach huts, small boats, little caravans. So it's quite a niche. And the lead manager here, Kester Capital, did an excellent job over about a 7-year period, upgrading this business, making it more digital, strengthening the management team, strengthening distribution, and it has really done extremely well. And we made, well over 4 times our money over that period. We've got another one that's coming up. So this deal has been agreed, and we'll get the money in July. This is Amethyst Radiotherapy. So Amethyst has a chain of radiotherapy clinics across Europe. They started in Eastern Europe, pushed out into Western Europe. And radiotherapy is a growing, it's been around for a long time, but the modern application of radiotherapy is regarded as very effective and cost-effective treatment for cancer. And they have been able to treat many, many patients as they've grown this chain across Europe. And this sale has been agreed to Fremen Capital. And we will make about 2 times our money and a 14% IRR, which is a perfectly acceptable return for us. Maybe a little bit suboptimal, but in the circumstances, given current market conditions, is really good. We have also had another exit through a so-called continuation vehicle run by Inflection. So this is where they have essentially sold 4 companies that they already managed to another vehicle that they manage, not necessarily with the same investors, but it continues under their management. And this is a growing trend in the market. Pricing and everything is determined by third-party investors, so it's a very sort of arm's length and rigorous process. And we will receive £6.4 million when that completes in a day or two. So looking at the long-term progression of the NAV and dividends, you can see that on this chart here. The dark blue is the cumulative dividends, the light blue is the NAV. So we're basically on a long-term growth trend. And this is another way of looking at the long-term growth trend. The gray line at the bottom is the all share index. And this illustrates the reason why you should all invest in private equity. And specifically in this company, you will outperform the market very substantially. I mean, it's what you should expect. You're taking higher risk to invest in private equity, so you should be paid for taking that risk. And in respect of our company, that is exactly what happens. There's a bit of a gap between the share price and NAV total return. And as I always say, that's an opportunity for investors because over the long term, these returns tend to converge. We're currently on a discount of about 30%, which is wider than I would like, but it is significantly lower than our peer group. This is another way of looking at the performance. It breaks it down year by year and looks at the different time periods. And you can see we've had a couple of quiet years. So hopefully this year will be a bit punchier. In terms of outstanding commitments to funds and looking at that in comparison to NAV, this is very average at the moment. It's bang on the 5-year average at about 37% of net assets. So we need to have outstanding undrawn commitments to redeploy the proceeds back into investments that will deliver future value. In terms of net debt, we had 90.4 million at the end of March. We've got plenty of headroom on our revolving credit facility. This is a perfectly comfortable level of debt. We like having a bit of debt. The closed-ended structure of investment trusts is very suitable for holding debt, and our portfolio is very well diversified, which means that people are quite happy to lend us money. And the returns that we expect to make from our investments over the medium and longer term are far in excess of the cost of borrowing. So that enhances returns, and it's something we've deployed very successfully throughout the company's life. Just looking at a couple of recent co-investments, this is where we invest directly into private companies. I'll just give you some of the headlines here. So we've invested in a company called Accounts IQ. So this provides software for accounting for mid-sized companies in the UK. It's grown very strongly in recent years. It is, if you like, a sort of next generation type of software. You might think of this as something like a smaller version, probably more modern version of Sage. And the deal is led by Axiom, who are software specialists. And if everything goes according to plan, we would expect to make about 3 times the money over the next 4 years. We've made a new fund commitment to Inflection Enterprise 6. Now, those of you who follow the company will know that we've had a very long-standing relationship with Inflection, which dates back more than 20 years. And they have gone from being a relatively unknown, quite small player to being the sort of doyen of the mid-market. And we've invested in nearly all their funds. This is their enterprise fund, which invests at the sort of lower end of their size bracket, which is where they started off, and they have a very strong track record there. So we have no reluctance at all in continuing to back them. We do like to back emerging managers, but when an emerging manager becomes a very successful mainstream manager, we obviously continue to back them, and Inflection is a case in point. This is the company, the new company we've put in the portfolio this quarter. It's called Friendly. It's a Finnish company, a Finnish IT services business, and we were introduced to this by Procuritas, who are a Nordic specialist investing in lower mid-market companies in the Nordic region. We've known them for many years, and they introduced us to this company, which was already in their portfolio, but there was an opportunity to buy in at below the original price that they went into it for, which was pretty attractive. This company provides services to a range of clients in Finland. It helps them with transitioning to the cloud. It helps them with cyber security, both of which are sort of strong growth areas. And it also has been a consolidator of the market in Finland. I mean, Finland's quite a small country, and it's got lots of these little IT services companies, and they're gradually coming together, and Friendly is a consolidator there. And as the business gets bigger, there are lots of economies of scale, and it becomes more attractive to a future buyer. We don't think we'll be in this for a long time, bearing in mind that Procuritas have already held it for a few years, and they've asked us to come in for the last couple of years of the hold. So we'd expect to make a good return over the next couple of years. So we've had a number of realizations in 2025 in the year to date. I'm not going to talk through all of them individually, but there are several there with good money multiples, good IRRs, coming from quite a wide range of private equity houses, different geographies, different sectors. And also we've had lots of new investments. Now there's quite a strong sort of software and technology theme here, but there are also some perfectly normal, everyday companies as well, where they've been acquired at excellent prices. This is the long-term pattern of drawdowns and distributions. You can see that there's a clear relationship. When you get a lot of activity on one side, you tend to get a lot of activity on the other, and vice versa. And that's quite interesting to look at it over the long term. This is our largest underlying holdings. I'm not going to talk through each one of them, just highlight a few things to watch out for. So Weird Fish is our clothing company. It's the biggest holding. We've got just under £15 million at work there. That is trading extremely well. It's ahead of budget, and the budget's very ambitious. And we are working with Total Capital Partners, who are the lead on this, towards achieving an exit at some point in the reasonably near future. So just watch this space. Sigma is the second largest holding. This makes electrical components. It's a US company. End market is in the US, but they have factories in Mexico and India. And that means that they're actually a bit vulnerable to all these tariffs, and they've had to increase pricing of their products accordingly to offset that, which they've successfully done. Argan Capital are the lead manager on this, and they have been trying to sell the business, and the business is quite robust, and I think some of its inherent strengths have been illustrated by people accepting these price increases, but that does provide quite a lot of uncertainty. So this is probably going to take some time to be sold. And then number 8 in the list is Amethyst. I've talked about that, so that money's coming in. And most of the other ones are not imminently about to be sold, but they are making decent progress. In terms of where are we invested, well, our split by geography is pretty much the same as it has been for a while. 41% in the UK. Now that distinguishes us from our peer group. Most of our peer group have a very small proportion in the UK. You probably heard various influential people trying to encourage investment in private markets in the UK. Well, we've already been doing that for quite a long time. You don't need to convince us of the merits of the UK private equity market. It's the largest in Europe. It's the longest standing. It's probably the best performing. and it's our home market, so we're quite happy to have over 40% invested there. And most of the rest of the money is invested right the way across continental Europe and in their private equity markets, which have developed really well over the years. We've got 17% in North America, mainly in the US. In terms of the vintage, about half the portfolio is over 4 years old, nearly 2/3 over 3 years old. And we monitor that statistic because the typical holding period or the typical investment thesis is around 4 or 5 years. So after about 3 years, if everything's been going according to plan, they'll start to prepare these companies for exit. So tracking the age of the portfolio gives you an idea of the maturing stock of companies that will feed through into realizations. And we always have a decent component that is coming towards fruition, if you like. The valuation on our average co-investments, which is nearly half the portfolio, is 11.3 times on an enterprise value to EBITDA basis, which isn't it isn't a high valuation by comparison with others in the sector. And that means that we don't need to wait for somebody to come along and offer a really high price for an exit to be worthwhile. And we're not very highly indebted either. The debt to EBITDA is 3.4 times, which is pretty modest. In terms of the sectoral split, it's well spread across lots of different sectors, although if you take healthcare and information technology together, that's about 46%, nearly half the portfolio. You know, that is in line, maybe a bit more than the overall industry. And it's because of the attractive characteristics of both these sectors. You know, information technology, it's a broad sector, software and hardware. The increased digitalization of many activities drives that. We're all aware of that, and there's some great opportunities. It's penetrating into all sorts of different, every field of human activity has got software involved in it these days, as I'm sure you're all aware. And we are playing that secular trend. Similarly, healthcare, lots of technological advances as well. And that is a well-founded trend that is based in science and demography. And we see many opportunities to invest there, so that's substantial. But we also have a lot in industrials and a bit in consumer financials and others. So, we have a well-diversified portfolio, which is a key strength. So just to conclude, we have seen a bit of progress in 2024 after quite a challenging period in the market with interest rates going up and realizations having been under a bit of pressure. We still had a decent increase in realizations in 2024. There was a bit of moderation towards the end of the year, and that has continued into the first quarter, mainly because of uncertainty with geopolitical events, which affects business confidence and investor confidence. And these are the sort of key ingredients that you require for progress. And these ingredients will come back quite soon, I'm sure. We had a good flow of exits in 2024, and the uplift to holding value. We will continue to have a decent uplift on holding value as we go through this year as well, I'm sure. The deal flow is excellent, both in terms of funds and co-investments. In fact, it's probably improved significantly, and we're just highly selectively taking those opportunities and laying the foundations of future growth. We've got a good balance sheet. We've got plenty of capacity in our debt facility, and we've got a well-diversified portfolio of companies which are making good progress. Now, that progress will ultimately come through into the growth in NAV. It doesn't necessarily come through every single year. I mean, we always grow it. Most years we don't say always. We grow most years, and you will find that there's a good long-term correlation between underlying progress of the companies and the growth in asset value. So you should be quite relaxed about that. And we expect to continue to grow value for shareholders over the short and medium term. So that ends the formal part of the presentation. So I'm happy to go over to Q&A now.